that are here now and people that will still come in. First of all, I want to thank to CMVM and to IOSCO for this organization, for organization of the World Investor Week, which is an amazing project towards financial literacy, which we miss or we want to develop in Portugal. Also, thank you to CMVM and IOSCO for inviting CFA Society Portugal to be a partner in this project. We have a lot of ideas and a lot of interest on developing financial literacy, and so this is a good forum to do that. Also, Anna Siemens, the head of sustainability strategy at Schroders, thank you for being here. Anna was kind enough to accept this challenge of commenting on the best answers we got on the challenge we launched in the last couple of weeks to get people to answer to the question, how my investments can make the world better or for a better world. Anna also selected the 3 winners that will take home, let's say, the prize, which will be or an electric scooter for people that don't care about, let's say, learning more about ESG, or the certificate, the inscription to the certificate in ESG investing of CFA Institute. It's one or the other. I guess they are both good prizes. Anna will comment each of the answers on its ESG merits, on its essence, and maybe teaches a little bit more about what those answers can tell us about, and how that reflects in the investment with ESG factors. This is the first part. We'll read the 5 best answers. The first 2 were very good, but were not the winners. The winners are the last 3, and I'll let you know. I'll let you know then that you're a winner. On the second part, Anna will present you some of the questions that are parts or are sample questions of the certificate in ESG investing. We can interact, we can choose an answer, and then Anna, which is an expert in sustainability, she will comment on the rightness or wrongness of the answers and why we would be tempted to choose a wrong answer in this context. So let's start with the first part. I'll read the questions on its original version in Portuguese, and I'll read the translation. Sorry if the translation is not that perfect, but we try to be as faithful to the original as possible. And then answer, Anna, please, you'll comment on the merits, ESG merits, if we can say that, of the answer. The first one of the best questions was delivered by Gabriel Soares. And he said this. Há décadas que visualizamos a evolução dos mercados financeiros na sua implementação e segurança propostas a todos. Entretanto, em contrassenso, somos também inundados de informações negativas referentes a práticas desfavoráveis a todo o assunto que tange ao ESG. Apesar do progresso já observado, o Green Finance ainda está longe de ser significativo no âmbito dos serviços financeiros. Uma abrangência a nível mundial para investimentos de green não apenas pode impulsionar a padronização e valorização destes ativos, como pode garantir o ativo mais valioso, a continuidade das próximas gerações. And now for people that don't speak Portuguese, Gabriel said this. For decades, we have seen the evolution of the financial markets in their implementation and security proposed to everyone. However, in contradiction, we are also flooded with negative information regarding unfavorable practices to the old matter related to ESG. Despite the progress already observed, the green finance is still far from being significant in the field of financial services. A global reach for green investments can not only drive the standardization valuation of these assets, but can guarantee the most valuable assets, the continuity of the next generations. Anna, please.
Well, first of all, thank you so much for inviting me along this afternoon. It's a real pleasure to have the opportunity to speak to you all today. And clearly, so many of you, like me, are very passionate about sustainable investing and the importance it plays in securing financial and social stability for the globe going forward. And so we've just heard from one of the 5 sort of best responses. What I would say, and before we get into that sort of who didn't quite make it into the top 3, I think all 5 were exceptional. So thank you so much to the 5 finalists. But I'd also like to extend a special thank you to everybody that got involved and thought about what is an incredibly complex sort of area of investment. So back on to the summary that we've just heard. And perhaps one of the reasons that this didn't win is maybe honesty, because for me, and what really stood out, the individual that wrote this was incredibly honest and open. So it's quite right that when people talk about sustainability, there's often some concerns expressed or negative emotion applied to that. And so for me, that sort of honesty is what's almost made me not put it in the top 3. And I felt as though what I was looking for was somebody that was much more sort of forward-looking and thinking about the future and the sort of power that sustainable investing can have going forward. And as I think about it, it really is those elements that draw out the long-term nature of the financial markets, the investors that ultimately fuel those financial markets. And particularly when I think about Schroders as an asset manager, the very critical role that we can play in directing capital into investments into companies that can support the transition to a more sustainable future. So I really did like this one. And as I said, it was really the honesty around where we were in a journey. And I felt that the author was really focusing on sort of what we needed to do more of. So I would have liked to have seen a slightly more positive position taken. So that's what sort of didn't allow this one to be in the top 5. But the 2 things that I really took from it was the statement, and apologies, I'm still working on my Portuguese, but I particularly liked, we are also flooded with negative information. So that's the statement that ultimately didn't get you into the top 5. But I think as we think about sustainable investing around the globe, really supporting clients, really supporting investors, really supporting companies, so everybody in the value chain, to understand the essence of sustainability and that principle around looking forward, identifying those companies that will succeed in the long term. The other thing I liked was in the sort of opening of the closing sentence, which is around almost that sort of passioned, or I saw it as a passioned plea around the importance and the global reach for green investments. So an excellent response, but not quite at the sort of top 3.
Thanks, Anna. Well, the second one I'll read. It's from André Salvado. He also did not get to the top 3. It's not a winner of a prize, but it's a winner of being one of the answers read here. I'll start. From André. A definição dos princípios de investimento e a inclusão de métricas de ESG como critério de seleção e avaliação de potenciais investimentos podem ajudar não só a gerar uma maior rentabilidade, como também a alinhar os valores do investidor com as empresas investidas. Integrando critérios de ESG na seleção dos investimentos, o investidor estará moralmente satisfeito porque investirá em empresas que têm um impacto positivo na sociedade e criam também mais valias quando comparadas com empresas que não integrem medidas de ESG, o que, entre parênteses, o que economicamente poderá vir a gerar retornos superiores. In English, the definition of investment principles and the inclusion of ESG metrics as criteria for selection and evaluation of potential investments can help not only to generate greater profitability, but also to align the investors' values with invested companies. By integrating ESG criteria in the selection of investments, investors will be morally satisfied because they will invest in companies that have a positive impact on society and also create capital gains when compared to companies that do not integrate ESG measures, which may economically generate higher returns. Anna.
Again, so another obviously fantastic response, I think, is the first thing to highlight here, because clearly, again, in the top 5, what I particularly liked was the first paragraph around the definition of sustain or investment principles and how we incorporate ESG metrics into that criteria. So I particularly like the first sentence. One of the words that jumped out to me, and I apologize if this is a translation, but this was one of the words that jumped out to me around in the second paragraph, which was the reference to investors will be morally satisfied because they will invest in companies that have a positive impact. So this is a really important consideration, I think, about aligning investments or values, the values that an investor has, with finding investments in valuable companies. I always think as an investment-led organisation that values part should come secondary to that very investment-led piece of let me find the best companies, the best long-term companies that will deliver the returns that we are seeking to meet our long-term goals and aspirations. So for me, it was the sort of inclusion of quite a strong word that meant you didn't quite make it over the line, because I really want to see that alignment of the two bits of it really is investment-led, and then a secondary component or therefore is that you can align as an end investor, as a client, you can align your values to your investment outcomes. So excellent definition. Really want to think about it though being about delivering those long-term returns, and as a byproduct being able to do the morally right things. Once you're in morals, and you have a lot of debate, I'm sure each of you on the call has done this when you've thought about sustainable investing, is what is sustainable. So when we think about those ethical considerations, then we can quite quickly end up in rabbit warrens or going down rabbit holes, because what makes something moral to one person is different to what makes something moral for another person. So I always caution around using the values and the morals bit too much. And so thank you, that was the second one.
Well, now on to the third one and the first winner, not in any particular order. The answer from Ana Gomes. O mundo das finanças e dos investimentos está a mudar, impulsionado pelos desafios que a sustentabilidade, ESG, lhe coloca e pelo papel de catalisador da própria mudança na economia e na sociedade. É ao mesmo tempo ator e gestor dessa mudança. Na verdade, investir com impacto, com propósito e com retornos atrativos não são necessariamente premissas inconciliáveis. Antes, pelo contrário, ao colocar o foco dos investidores no longo prazo. O investimento sustentável é efetivamente um jogo em que todos ganham, win-win situation, investidores e a sociedade como um todo, tornando o mundo melhor. Em inglês, the world of finance and investment is changing, driven by the challenges that sustainability, ESG, poses and its role as a catalyst for change in the economy and society. It is both an actor and director of this change. In fact, investing with impact, with purpose, and with attractive returns are not necessarily irreconcilable premises. On the contrary, placing the investor focus on the long term. Sustainable investment is effectively a win-win situation for everybody, investors and society as a whole, making the world better. Anna, you can comment.
Thank you, and congratulations to Anna, our first winner. And possibly already from the comments I've made in relation to the first two, you're going to have spotted some key words that I particularly liked about this response. So recognizing how quickly our environment, and I mean that in the broader sense of the terms of the broad economy, is changing. So I particularly like the opening here around the world of finance and investment is changing. A great example of to bring that to life is every year ahead of the Davos conference, the World Economic Forum does a survey of economists and global leaders to understand the risks that they think have the potential to derail our global economy. And each year they ask the specialists to identify their top 5 risks that could carry the biggest impact. If you go back 10 years ago, those risks were dominated by economic risks. Today, they're dominated by environmental risks. And last year, for the first time, the top 5 were all environmental risks. This year, when they did the survey in January, 4 of the risks were environmental and 1 was a societal risk. And perhaps unsurprisingly, it was infectious diseases. So, we are living in a world of constant change and evolution. So I particularly liked that opening. And I also liked the statement around sustainability has that ability to be the catalyst for change. And that certainly aligns very much with the way that Schroders actually thinks about looking forward to identify those companies that can navigate sustainability risks effectively. And we've introduced something called the notion of impact adjusted profits, which I think really aligns nicely with the other statement around purpose that was called out in the statement. And finally, the last thing is, for me, investing is always for the long term. I appreciate that certain types of investors may have slightly different horizons, but ultimately, for many investors, you are really looking at a long-term solution. And so that reference to long-term was also attractive. So congratulations to our first winner.
Muitos parabéns à Ana Gomes. Anna, I guess Anna is online. Anna, the other Anna is online. The second winner is Marco Afonso, e vou ler a resposta em português. Mais do que os investimentos financeiros promotores da sustentabilidade ambiental, do progresso social e das melhores práticas organizacionais, são os investimentos de tempo e de ação que cada um de nós tem a opção de fazer na sensibilização da nossa sociedade que irão verdadeiramente fazer a diferença na transição para um mundo melhor. Cada gesto, comportamento, palavra tem o potencial de contribuir para um futuro que garanta às gerações vindouras as condições necessárias para que possam realizar os seus sonhos. É esse o legado que nos cumpre concretizar. In English, more than financial investments that promote environmental sustainability, social progress, and best organizational practices, it is the investments of time and action that each of us has the option to make in raising awareness in our society that will truly make a difference in the transition to a better world. Every gesture, behavior, word has the potential to contribute to a future that guarantees future generations the necessary conditions so that they can fulfill their dreams. This is the legacy that we must fulfill. Anna, can you comment?
So I appreciate that this one was a little bit more emotive in its language, but that was one of the reasons that I particularly liked it. But one of the key words that really stood out for me was the word transition. So in that final statement of the first paragraph, to make a difference in the transition to a better world. And I always think about the United Nations Sustainable Development Goals, and those 17 goals that set out a blueprint for a more sustainable future for our planet and the people that live on our planet. And in achieving those goals, the ultimate purpose is to deliver a better world. And in order to move from where we are today, we need to go on a transition. And that is a transition that every company, every government, every one of us needs to make. And so it was that word that I particularly liked. I also liked in the opening the reference to organizational practices. And you know, when I think about the acronym ESG, the governance piece is critical here. So how managements structure themselves, how they set themselves up for success is incredibly important, because you know, the best laid plans may not be delivered against without that successful organizational effectiveness. So for me, it was those elements that really stood out on this. And I also liked the legacy idea and this idea that we are leaving behind a better planet for our future generations. So congratulations, Marco.
And the last winner, Samuel Capucho. O investimento em ESG é, na minha opinião, a melhor estratégia de investimento a seguir para tornar o mundo melhor. Alinham-se valores pessoais e objetivos financeiros. Os acionistas e todos os envolvidos saem a ganhar. São ideias de investimento que olham para os aspectos ambientais, sociais e de governança das empresas. Mais do que os fundamentais da empresa, importa agora estes 3 fatores que, no fundo, serão os drivers do desempenho. E se já sabemos que é possível investir em empresas que promovam um mundo melhor e ao mesmo tempo obter retornos financeiros, por que não o fazer? In English, ESG investment is, in my opinion, the best investment strategy to follow to make the world a better place. Personal values and financial goals are aligned. The shareholders and everyone involved wins. These are investment ideas that look at the environmental, social, and governance aspects of companies. More than the fundamentals of the company, it matters now these 3 factors that, in the end, will be the drivers of a company's performance. And if we already know that it is possible to invest in companies that promote a better world and at the same time obtain financial returns, why not do it?
Thank you. I really liked the question at the end. So why not do it? The ultimate way, I think, of leaving the statement. So I thought that was a really strong end. What I particularly liked about this submission was the reference around the shareholders and everyone involved wins. One of the critical things, and I talked about the sort of the action required to meet the sustainable development goals, requires actions from everybody. And when we think about finding those superior investments, we look through what we call a stakeholder lens, and that's exactly what I think Samuel was alluding to when he talked about the shareholders and everyone wins. So there's the key stakeholders that a company interacts with, so clearly shareholders being critical, but the other key stakeholders are the employees of the company, the suppliers in that supply chain, the community in which the organisation operates, the regulators or the government that oversee its operations. It's also the environment, the impact that the company has on the environment as well. And it's critical that the company takes into account all of those different perspectives. Now, at times, they could be very conflicting objectives, but a company that can navigate that well is surely going to be a long-term winner. So I really like that statement. The other one I liked is starting really to get through, and I'm bringing in some of the jargon from part 2 of the session that we learned through the CFA program, is the idea of that triple bottom line. So it's alongside the financial elements, taking into account those environmental and social aspects to really understand the potential future returns of a company. So great ending, and I love those 2 particular parts about the stakeholders and that being broader than just shareholders, and that idea of the triple bottom line. So congratulations, Samuel.
Congratulations to Samuel, to Mark, and to Anna. So let's go forward to the second part. Now, as I said before, Anna will be presenting some questions from the certificate in ESG investing, where you will have the chance to choose the answer here live, interacting with us, and then we'll see the results, and Anna will comment on those. So please participate, and let's see how is your knowledge or how is your sensibility for the ESG matters or ESG related subjects from in this early stage of this revolution, if it can say that. Anna, please go.
Okay, so thank you very much. What we're going to do now is go through a series of questions that have been part of the CFA and ESG certificate. So this is going to test my tech skills. So I'm going to be pulling up a poll, and we will ask you a series of questions. Hopefully you can now see that poll in front of you. So what we would like you to do is respond to what is question 24, which is which of these statements best describes responsible investing? Is it A, targeted investment returns with certain investments being negatively screened? Is it B, ESG factors taken into account to mitigate risk with a focus on financial return? Is it C, investments made in a way that captures returns while achieving an intentional effect? Or is it D, ESG factors taken into account to mitigate with a focus on capturing ESG opportunities? So I'm just going to give you a moment longer to add in your responses, and then we will reveal the answer and show and see how well you've done. So I'm just going to give you, I can see the numbers ticking up at the moment for who has responded. So please put in your response. Is it A, B, C, or D? And in this particular case, we're just looking for one answer. You can see we've got higher participation now, so I'm just going to give a moment or two. And of course, in a moment, I am going to reveal the right answer. But I think it's really important that we also talk about why you might have selected a different answer, particularly for this question, because I did mention earlier in my introductory comments that sustainability is often considered a complex subject, and it's full of jargon, and getting behind that is so critical here. So we're almost at the 70%. Are you happy if I end the poll there? Shall I end and then we can have the big reveal?
You already passed the 70, you can go.
Okay, let's go. So can everybody see the results of that first poll? I just wanted to do a check. I haven't used this tech before, so just wanted to make sure you're seeing the results.
Yes, I think it's
fantastic. So on the actual answer was B. So question was, which describes responsible investing? And B, ESG factors taken into account to mitigate risk with a focus on financial return. And interestingly, that wasn't the most popular response. It was C and D. So how do I think about those C and D? My understanding and my way of thinking about the response to C is that the word intentional, so it talks about capturing returns whilst achieving an intentional effect, is defining impact investing. So that's where we absolutely are seeking a particular outcome, but we want to be really intentional with that. So it could be, for example, investing in renewable energy companies. And so by investing, we are having an intentional effect on the transition to a lower carbon world by promoting, if you like, investment in renewable energy. For D, I saw that as an example of sort of best in class investing, so that you could essentially be identifying companies that are going beyond simply taking into account sustainability from a sort of risk consideration and really focusing on the upside, so the capturing of the return. So I think that's what sort of moves you into a sort of best-in-class approach rather than the broader responsible investing category. So for the individuals that selected B, congratulations. Why I picked this question first of all, because it's question 24, it's not early in the exam paper that we were looking at, is because I expected this outcome. I didn't expect everyone to answer section B, and that is because, back to that principle, that sustainability is an incredibly complex area. filled with huge amounts of jargon. And so it's incredibly important that when you use terms, you really explain what it is you mean by them. So all of you, hopefully you've learned a great deal from that very first question. What I'm going to do now is stop sharing that one, and I should be able to go back and now look at the next poll question. So give me a second, and apologies, probably going to take a moment to switch between each one. So this is now question 1 in the paper that we use. And the question is, and again, I'm just going to, oh, hang on, if I launch it, sorry, I hadn't launched it. So now you should be able to see it and you can respond. So while you're thinking about it, I'll just read it out. Hopefully that helps you think about which response you want to give. So research shows that companies with long-standing good practice in terms of sustainability, do they A, outperform their peers in both accounting performance and stock market returns, B, underperform in accounting performance and stock market returns, C, outperform in accounting but underperform in stock market returns, or D, underperform in both? So I'm just going to give you a moment longer to think about your answers there. I can see that's ticking up at the moment. Clear favourite at my end that I can see. I'll just give a moment longer. Okay, sorry, it's dropped. I'm going to end the poll there. Okay, so this time we're seeing a clear favourite from A, which is actually the correct answer. So what we've seen over the recent time is that actually we've had outperformance from companies that have good sustainability experiences in both their accounting and their stock market returns. Now, research in this area is growing, and there's some fantastic research, if you want to look it up, by Morgan Stanley. They've done a very extensive review of over 11,000 mutual funds globally and looked at how sustainable funds perform relative to sort of standard market funds. They did this analysis originally in 2018 and they repeated it last year. And in 2018, when they did the first set of analysis, they didn't get evidence of sustained outperformance. They did get evidence of lower risk from sustainable funds. But when they updated that analysis, when they repeated it in 2021, they actually began to see greater outperformance coming from sustainable funds. So I think it's fair to say that there is growing evidence that investing for good, investing for that long term, investing in those sustainable companies also translates into superior investment returns. There's also some great research, and if you want to look it up, by the New York Stern University, where they've looked at a number of research papers and sort of collated all the analysis across a great range of reports looking at sustainable funds. So do look that up as well. That was published earlier this year. So that's our...
You forgot to share the results.
Oh, I'm so sorry. I just realised I didn't share. So sorry. I thought I'd done that. Sorry, I ended the poll but didn't share. So yes, sorry. The and clearly in this particular one, with I'm going to say with 3/4, so 75% selecting the right answer. And as I said, if you Google this, you're going to find very different perspectives. It depends on what time frame, which particular funds you look at, but there is that growing evidence around A. So congratulations to those of you that got that one right. I will stop sharing this one and I will close that one, and then we will go on to our next question. Hopefully you can see that now. So again, I will read out the questions and then that will give you the opportunity to think about your answer. So which action would be undertaken first by an investor wanting to follow an engagement strategy with a company in a cost-effective way? Is it A, defining the scope of engagement and prioritizing engagement activities? Is it B, developing a clear process which articulates realistic goals? Is it C, adapting the engagement process to the local context? Or is it D, framing the engagement topic into a broader strategy discussion? So just going to give you a moment to think about that. I can see the results, the answers are coming through and pretty quickly. Thank you very much for those of you that have already submitted. Just give you a moment longer. If I may say, I sort of, well, we'll talk about it in a bit more detail when the final results are in, but this was one of the ones where I had to think a little bit myself. So for those of you that don't know me, and hopefully that's most of you on the call, I always approach things in a slightly different way. So I did the whole paper to see how I did. I won't give you quite my score out of 100, but there were certain ones where I did sort of have to think long and hard about what answer was being looked for. So I'll just wait a moment longer. We've got quite high participation now, so I'll just give you a moment or two to continue putting in your answers. While we're waiting, maybe for those last few people to submit, what I would say is I think engagement. So engagement being the process that you can follow with companies to really encourage them to sort of transition to a more sustainable future is a critical part. And I talked when I was going through the 5 submissions and what I particularly liked. We are on a transition to a more sustainable future, and the encouragement that owners of companies can make through active engagement is critical, I think, to the long-term success of being able to transition to a more sustainable future. So I'm going to end the poll there. I'm going to share the results. And so congratulations, the sort of highest and most common answer picked was the correct one, which is A. So which action will be undertaken first by an investor wanting to follow an engagement strategy with a company in a cost-effective way? Of course, defining the scope of engagement and prioritizing and get the activities that you actually wanted to talk about. This is critical. So, I mean, for those of you that picked B, I have a lot of sympathy, but the critical part of the question here was which would you do first? So before you can actually articulate the goals and the objectives, which are critical to a successful engagement, you must really define what it is you're seeking to engage on. So what's the topic is first stage. Second stage, in my view, is B, which is that very clear articulation of your expectations from the company. And so congratulations to those of you that put A. I did spot quite a few of you, and again, I wasn't sort of surprised by this. I did spot that a number did select D, which is framing the engagement topic into a broader strategy discussion. And again, I think this is a critical part of your engagement program, but it comes after the generation of the ideas, i.e. what is it that we really want to engage on? Because then, as a second step, once you're identifying, what are those objectives, then you can work out, well, how are we best going to actually approach this engagement? How does it fit into the broader discussions we're having with that company? So thank you very much. What I will do now is go on to our next question. So please bear with me as I call that up. Okay, so this is question 10. Again, please feel free to already enter your responses. So what is an indirect environmental impact of a company cutting trees and transporting them to its production plant. So you're a paper company, and of course you've got to cut down trees and move them around. So what's the indirect environmental impact? Is it A, carbon emissions from the haulage lorries? Is it B, natural regulator of carbon dioxide is destroyed? Is it C, deforestation? Or is it D, local species are disturbed? Thank you very much. I can see a number of you have already started responding. What I think is interesting about the challenge we face on the environmental side, and at Schroders we talk a lot about this, is the idea that every single company will be sort of impacted by the transition to a lower reliance on carbon, and assessing the extent to which a company is going to be impacted is therefore critical. But it's not just those direct impacts, it really is the indirect or the supply chain elements that you need to think about. So this question I thought was an excellent one to really get to the heart of that. I'm going to end the poll and share the results, because what to me is interesting is that actually all of the responses have received so all of the options have received responses, sorry, I should say. And you can see that, you know, A is sort of leading, and that is the correct one. So A, it's the emissions that come from the lorries that are actually transporting the trees, that is the indirect. B, C, and D are direct environmental impacts. So every time we cut down a tree, we remove that tree from the ecosystem, and that means that it can no longer absorb that carbon dioxide from the atmosphere. We're clearly cutting down trees, so that's a direct impact on deforestation. And every time we cut down those trees, those local species, so those bugs and those bees, are disturbed. So B, C, and D are direct impacts, whereas A, these are the emissions that come from transporting, is the indirect. So congratulations to all of you that got the correct answer, which was A. Thank you very much. So I will stop sharing this one and move on to our next one. Okay, so this is question 47. Which of these ESG issues included in the materiality map would be best described as a social issue? Is it resource management? Is it business ethics and culture? Is it executive remuneration? Or is it health and safety? So I'm just going to give you a moment to respond to question 47. I can already see a number of responses coming through. Just give it a while longer. Thank you. So for those of you who haven't yet spent a lot of time studying sustainability, the concept of a materiality map is, so you may have come across this concept in other areas, but in relation to sustainability, what this is helping identify are a number of sustainability risks or opportunities that a company is exposed to, and they are typically grouped together into different sections, and generally that's some elements along the environmental spectrum, the social and human capital spectrum, sort of business model, and then leadership are typically how we think about those. And the idea is then you're able to identify for different industries what are the most material elements for those particular industries, because we must recognise that depending on which industry you sit in, there'll be elements of sustainability that are more important. So, for example, let's think about the sort of health and safety spectrum. That will be far more relevant for an industrial company compared to a financial services company. But executive remuneration, in terms of particularly, that will cut across every firm. But when we think about that from, particularly financial services firms where remuneration packages can be high, so that when we think about the materiality matrix, it really helps us identify for different sectors what are those most material, what are the most important elements for them. So great responses so far. So I'm just going to share the results. Hopefully that's come through. So congratulations. The most commonly selected response was D, health and safety, which absolutely this issue is. So congratulations. So if I think about the other elements, I would have put sort of resource management and business culture, business ethics and culture, and executive remuneration into those sort of business model and governance aspects, whereas health and safety to me is very clearly a social issue. So congratulations, everyone. So I will stop sharing on that one and we will move on to our next question. So this is question 50. Again, I'll just read it out as you start responding. Given that an analyst is able to judge the materiality of an ESG factor, which of the following is true? Is it A, it would be possible to assess the level of impact of the ESG factor? Is it B, other analysts with the same data will make the same materiality judgment? Is it C, the interaction of the ESG factor with financial performance will still be uncertain? Or is it D, cultural factors are unlikely to play a part in their judgment of materiality? So I'm just going to give you a moment to think about question 50. Thank you, everyone that's already responded. We'll just give you a moment more. And we're running right on time. So after this question, there'll be 2 more questions I think we'll have time for this afternoon. Okay, I'm just conscious of time, so I'm going to end the poll there and show our results. So slight difference in opinion. So the correct answer is C, the interaction of the ESG factor with financial performance will still be uncertain. So this is back to the almost the sort of heart of the challenge with sustainability, is that the outcome is still simply by just considering that sustainability element and judging whether it's material or not doesn't necessarily mean it will lead to a financial outcome over a certain period. So for me, I picked C. The challenge and what I liked about the individual, so it was only one individual, but the individual that selected B, other analysts with the same data will make the same materiality judgment. This is right at the heart. So it is a judgment call, which are the most material components. There are things like the SASB and materiality matrix, but in assessing which are the most important factors, generally that will come down to a degree of judgment. So I might view materiality in one way and somebody else might in another. And in fact, Schroeder's, I talked about our approach using stakeholders. For every sector, we identify which are the critical stakeholders and assign weightings to them. Then when we look at SASB, although we're not using exactly the same bucketing and approach, you will see differences between the weight that we apply to certain sectors and to certain stakeholders. So there is a degree of judgment here, and you're never certain of the outcome. So congratulations, though. Most people got that one right as well. So well done. Overall, your scorecard is doing very well this afternoon. As I said, we've got 2 more questions that I think we just have time to go through. So coming up is hang on 1 second. This is one of my favorite elements of sustainability. I've probably already ruined it because of the reference I made to the award winners. But which of these are the 3 parts of the triple bottom line? A, ecological, social and governance. B, social, environmental and financial. C, ecological, governance and financial. Or D, social, financial and governance. So triple bottom line, which are the 3 components that are incorporated into the triple bottom line? I'm just going to give you a moment or 2 longer. This is our penultimate question. So thank you very much for bearing with us as we've gone through so many. Hopefully you're keeping a scorecard of your own results to see how you've done. Just give it a moment longer for those of you that haven't quite ticked an answer. Great, I think we've got enough responses, so thank you all. I'm going to end the poll and share the results. Thank you. So the answer, and I did slightly give this away in my introductory comments around the award winners, is B. It's the consideration alongside those traditional financial factors, so financial being one of them, of social and environmental elements. So congratulations to those of you that selected B. At the beginning, I was a little worried because B wasn't getting many selections. So this was, I think, also a really great question in terms of really, in an exam condition, reading the question, because here we're talking about the triple bottom line, not just sustainability, so E, S and G. So for me, it was really critical to make sure we selected, because it was the triple bottom line, we should have instantly been thinking this is the combination of financial plus other considerations, and then it is those social and environmental elements that are critical here. So congratulations to those of you that selected B. So I think we've just got time for our last question. Give me 1 moment to call that up. And our last question sort of takes us right back to the very beginning. Which approach to ESG would require the most intensive use of resources by an investment manager? So this is back to some of those definitions and some of the thinking around what do those things mean. So is it A, negative screening, B, active ownership, C, best in class, or D, thematic investing? And so which one is most resource intensive? And I talked earlier about the sort of different components of sustainable investing. And again, on the face of it, all of them, because they are have those different areas of focus, could be considered to be pretty intensive. But for me, there is one area that really stands out, and when we reveal the results, we'll talk through. In fact, I think I will stop the poll there because we've got great participation, and I will reveal the results. Hopefully you can see those now. So congratulations, that most intensive resource is around B, active ownership. So this is the practice of speaking to companies and encouraging them to transition to a more sustainable future. So this is incredibly labor intensive because you're having one-on-one discussions with company management around particular actions that that company needs to take. And personally, when I was going through this and trying to rank them myself, I actually put negative screening as the least intensive, and that's because, and maybe it's Schroeder's approach to it, but we have a very, very mechanistic approach where a client will identify things they don't want to invest in, and then we simply use a screening tool to basically remove any companies that have greater revenues than a certain threshold from our universe. So there's no sort of active involvement to identify companies at all. Best in class, I would agree. I think that could be quite time consuming because you are looking for who's the best. But for me, it really was B, because that's where you have that ongoing active dialogue with the company to really encourage them to transition. So a great question to finish on. Thank you all so much for your participation. That's been, I've thoroughly enjoyed it, so thank you very much.
Thank you, and it was very, very, it was a fun way to learn more about ESG investing and SRI. Before you leave, Pedro Barato just put in the chat link to a questionnaire from CMVM about the event, the organization of the event. If you could please answer the little questions that are in the link. And I just saw that Marco Afonso, one of the winners, said that thanked for the selection and is deeply honored to have met the expectations. Just as a side note. Many thanks, and it was very, very insightful. Regarding the winners, again, congratulations. You will be contacted by CFA Society Portugal about you'll have to select between the electric scooter and the certificate in ESG investing. I guess I want to believe that you at least this experience with Anna got you to choose the latter, not the former. Thanks again to CMVM for the invitation to be part of this project, which is the Investor World Investor Week, to CMVM and to Yoshko. And again, thanks to everybody that's here. Congratulations again, and please just answer the questionnaire, and see you next time. Many thanks.
Thank you. Bye-bye.
Bye-bye.
Recording stopped.